A couple of things that are going on today. Of course, this polar vortex that is sweeping across the nation. Absolutely incredible. I woke up this morning. I was driving in. It was like 45 degrees, right? And you think about that, it's like, it's kind of chilly. For Texans, we get below 50, it gets pretty cold. In fact, if it gets below 40, we shut down all of our schools and everybody stays home for a week because basically when it comes to cold weather, we're wussies. But we're just not used to it. I was just watching the headlines a second ago. They're talking about these 2,500 migrants that are in these tents in Mexico City. I hope the news doesn't get to them about this polar vortex because they'll all wind up going back to, screw that, I'm going back. So it's way too cold.
They don't understand basic geography in the wintertime.
Yeah, I tell you what. Well, the reason I bring this up, a couple of things. One, it is negative 45 degree wind chill factor. They were talking about up in the high, up in Chicago and around those areas, the wind chills are so cold that they say when you go outside, don't breathe in too deeply. I mean, that's crazy type of cold, right? Don't breathe in too deeply because it will kill you. So, it's just crazy how cold it is. And it's interesting, of course, Occasional Cortex has been talking about that if we don't solve climate change, the whole world's going to die in 12 years.
12 years.
12 years,
yeah.
We're done. It was just interesting. NASA came out yesterday and said, we're not worried about global warming. What we're worried about is global cooling, and which is a much more serious consequence. Global warming is one thing. Global cooling is a much different thing. The last time that we had a serious run of global cooling on the planet, it was called the Ice Age. So, you might want to be more concerned about the impact of global cooling. And for people being hit by this polar vortex right now, obviously, it's pretty much close to an ice age. There's another reason I bring this up is that it has to do with the economy. Yep. As always, when we talk about stuff here on the show, we always relate it back to what does it mean for your money, your job, your life? What does that have to do? It's interesting because we're all looking at weaker economic growth right now because of a series of events. The government shutdown is going to clip off about 0.2% off GDP in the first quarter. But this polar vortex is so cold that it's actually limiting flights. Mail carriers are not delivering mail. A whole lot of services have been shut down because of this polar vortex. It's literally just that cold. That's going to impact economic growth. So what we're likely going to see when we begin to report first quarter's growth rates in the second quarter. Now, we'll start getting GDP reports for Q1. We'll start getting those in March. But we're going to look to see a contraction in economic growth from this because we've had a series of very, very cold vortexes running through the economy. So look for a bit weaker growth than what is kind of currently expected in the headlines. And again, this will be blamed back to the fact that, hey, it's cold winter. But you know what? We have cold winters. That's why, we already adjust GDP for what we call seasonality, and then we adjust that for cold weather. But this was so cold that it's actually going to probably decrease growth a bit more. So that is going to kind of come through and weigh on that. The other issue this morning is, of course, futures are up this morning on the markets. Markets have really been struggling over the last week or so, and I shouldn't say struggling. What they've been doing is what we call consolidation. Market prices really haven't gone anywhere. In fact, if you're watching our live stream right now, you can see this chart of the S&P, and you can see here that ever since we've kind of gotten back to these levels that we were back in October and November, the market's really not been able to go anywhere. The good news is the market's been staying above this 50-day moving average over the course of the last few trading days. Retested it several times here and has been able to hold on to it because the markets have been simply waiting to see what the Federal Reserve is going to say. That meeting announcement is today, this afternoon. So the very interesting thing here is that we've been trapped between these previous kind of resistance levels back from October, November lows and staying above this support at the 50-day moving average. So this is a very tenuous juncture for the markets. Now, this morning the markets are pointing up a bit here because Apple reported earnings yesterday. All eyes were on Apple, so to speak. What was interesting is that Apple is actually trading higher this morning because their earnings report wasn't as bad as expected. So, you kind of think about this for a second for investors. They're going, hey, I'm going to buy a stock whose earnings were really pretty bad, but they weren't as bad as I thought they were going to be. So, hey, let's buy it. Let's throw our money into it because, hopefully it can only get better from here.
Way to jiggle the bar, guys.
Yeah, exactly. And of course, they missed earnings. They actually missed earnings yesterday. Those earnings had already been downgraded substantially for what was going on with Apple. Of course, they've had issues with China, this whole trade impact. The China's slowdown has impacted their sales. But importantly, they missed earnings, but it just wasn't as bad of a miss as everybody expected. So the stock is going to trade up this morning, and it's such a large component of the market. It's kind of lifting the whole market this morning. But the real news is going to be this afternoon about 2 o'clock when the Federal Reserve has their presser after their meeting. Now, the Federal Reserve has decided that it would be in the best interest of the world for them to have a presser after every meeting now. My opinion is it would be better if they just didn't talk at all and just did their job. It's the talking that causes all the volatility of the market. So that is going to come out this afternoon. That will move the market in one direction or the other. I suspect what they're going to say today is that they are going to back off hiking rates. They're going to kind of allude to maybe a potential review of their balance sheet reductions. Not say anything about actually reducing the rate of reduction, but actually just say, hey, we're aware of it. And this will be taken as positive news. So I would expect this market to trade up this afternoon. The thing is if we can trade up and break out of this trading range, we need to really kind of get out of this range that we've been in over the course of the last week. If we can do that, we've got a real shot at getting back to the 200-day moving average, which is the next big kind of resistance level. We'll come back after the break. I've got a lot of stories to get into this morning and, of course, get you on your drive to work. So thanks for joining the Lance Roberts Show this morning. Make sure and get by our YouTube channel, YouTube, Lance Roberts Show. You can get all of our podcasts and videos there, as well as on our website at thelancerobertsshow.com. We'll be right back.
Catch the Lance Roberts Show anytime, day or night, online at lancerobertsshow.com.